All right, welcome back. My next guest puts it pretty simply like this, right? Since 1871, that's a long time ago. I wasn't there. But there have been 151 rolling 5-year periods, or 87% of which have been profitable. There have been 146 rolling 10-year periods, and 96% of which have been profitable. And how about this? There have been 136 rolling 20-year periods, which 100% have been profitable. So how do you like them apples? That's all I can say about that, right? He's right when he says with odds like that, why exit the market? This is another great stat, right? And it's pure gold, right? The average recovery over the past 35 years after 10 of the major conflicts we've seen is roughly 27%. He also gives us some sage advice. In this market, we have traders and we have investors, right? And he rightly points out you need to choose which side you want to be on because you can't be both. He also goes into some great math on where you'd stand if you just invested just a little bit more of your money in some of our better companies in the country, regardless of your time horizon. So simply put, he pretty much covers it all. So let's bring him on to help us all through it. Welcome into the show, Mr. Keith Fitz-Gerald. He's the Sultan of Seattle. Appreciate you coming on, Keith. Always have something great to say. You did a great job in your notes. I think it was yesterday morning's notes, but they were fantastic in trying to settle the investor down and take a bigger picture look at everything. I thought that was fantastic.
Well, you're very kind, and it's something we try to do a lot. We have a saying, when in doubt, you zoom out. Now, I'm starting to hear that, parroted around Wall Street, which is great because it means people are paying attention. People forget at times of crisis that the bigger picture is still there. AI hasn't gone away. Great companies haven't stopped suddenly doing business. You aren't using less of what you need every single day. And if you can tap into those companies, history will do the heavy lifting. The key is the person staring at you in the mirror. You got to get that person under control.
And you talk a lot about optimistic investing, not negative investing. And I likened this when I was talking to our first guest today. The folks that invested optimistically over Liberation Day last year after everything tanked did fantastically well because they thought about, what if this works? What if everything goes right? Or what if most things go right? Not everything goes right. But the negative Nellies out there that thought, oh, tariffs are going to be inflationary. This is going to be horrible. Look at all this. I want to get out of the market. Well, they got absolutely smoked. I hate to say it, but it was another example of that this time around. What do you think?
Well, it is and it was. And, if you recall, I got absolutely excoriated on Wall Street for saying that you want to buy into that dip. And lo and behold, a few days later, vindication arrived with all capital letters. So I was very happy to see that. I think this time around is going to be no different if we look at prior conflicts. And I'm talking not just 10 conflicts over the last 35 years, in which, as you pointed out, as your lead up, 27% recovery. I'm talking about since the dawn of recorded history. Innovation inevitably is produced at times of crisis. And I think this is going to be no different. We don't know what that looks like. It changes the plot, maybe delays it a little bit because it's modern warfare and we don't understand it exactly, but it doesn't obviate the obvious if there is such a thing.
All right, and again, I've said it every segment up until now. These things ultimately end. They don't go on forever. Yes. I've been around for a long time. I think you have too. A lot of the things I've seen happen, Gulf War being one of them. We've had a few wars in between there even. They've all ended. So this is going to end. What does your investment thesis look like when that finally does happen? Because this will too pass. And everybody's got to have an idea about where they want to be standing when it finally does. Because all you hear, and I get it, it's hard. What if we have $150 oil for the next 6 months? What if the Straits of Hormuz is closed forever? I mean, yeah, what if? But what if it all works out? What if the Middle East is a great place to invest? What if the Middle East is a great trading partner? I mean, there are some, and I tell you what, you can go on and on with that topic because this could be a generational tide of shifting event that could really make a lot of our portfolios look a lot better faster than we ever thought.
Well, I agree with that thought. And, and here's the thing is people are saying, well, wait till the smoke clears. Remember what Lord Rothschild said, is you buy on the sound of cannons, you sell on the sound of trumpets. So, if we hold true today, use that philosophy, you want to be thinking about that point in time now. You want to be assembling those great companies now because there's not going to be an all clear signal. There's not going to be an on-off switch. Bottoming is a process, and this time is going to be no exception. So I'm preparing now. I'm starting to buy those great companies now. I'm continuing to reinvest in companies I already own now, because I know when the smoke clears, everybody else is going to be standing there going, oh my God, I got to buy. And FOMO is one of the greatest profit makers ever.
All right, real quick before we go, you mentioned something else in your notes about, hey, if you just put a little bit extra money when you were younger away in some of these great companies that the U.S. has seen a massive explosion, it really could have really helped your portfolio. But then you also said there are some companies now for the older investor that doesn't have the long time horizon to get paid off as well. So can you go through that real quick for us in about a minute?
I'd be happy to. Thanks for noticing that. You know, people talk about you got to have money to make money. Not true. Even a small amount of money can make a huge amount of difference. So, for example, if you look at Tesla IPO 29 June 2010, it's returned 24,000 some odd percent, Scott, which means every $1,000 invested back then is worth $249,000 today. Question is, the person in the mirror allow you to hang on? Apple, same thing, IPO'd on 12 December 1980s, returned 257,000 some odd percent. Every $1,000, Scott, is worth $2.57 million today. And finally, NVIDIA began its turn to AI in 2012. I pointed that out. Everybody said, no, it's a video game maker, not going to happen. Well, the last laugh is on everybody who was smart enough to get on board, because it's returned 444,000%. Every $1,000 invested back then would be worth $4.45 million today. Point being, even small amounts of money today can make a material change in your investment future. And people say, I don't have 20 years. Okay, fine. Palantir's returned 1,500% even after all the selling. So there you go.
That's awesome. I love it, because you can't argue with math. It's just math. You know what the great thing about math is? It takes the emotions. It takes the emotions out. It's just the math. So I appreciate you coming on. Always love what you have to say. Great research, Keith. Keith Fitz-Gerald coming to us all the way from Seattle.